So guys, I'd say let's get ready. I hope, is everyone able to hear me? That's the first time just doing the live stream on YouTube. If someone would be so kind to just write into the chat, in the YouTube chat, that they can hear me. So I know everything's working fine and we can get started. Alright, okay, I'm just gonna test it myself quickly. On YouTube, yeah, everyone's able to hear me. Perfect. Alright, so now it's the first time I'm streaming here only on YouTube because I have been banned from the Masters Discord for sharing my honest opinion regarding the DR IDR and DR lens in one of my live streams on this Discord server. That's the reason I have been banned. It's alright, it's not the worst thing. I had my Patreon membership also cancelled because June. And I want people basically to move over to YouTube and get used to that. I'm only streaming on YouTube. Actually, I'm going to do that right now. And good. We are done. So basically what we saw today, I have my, let's get rid of the DR IDR for here. Since I'm banned anyway, we don't really need it. It's an old ICT concept. And this stream is going to be focusing on the Twitter calls that ICT makes. I have things to do today. Hope that holds you over. I think he's already through with tweeting everything here. Buy side liquidity being taken, backed and tagged. Right here, 1 minute ES. Basically right after the 8 a.m. opening. So he traded the pre-market session today. We had red folder news on the calendar, the advanced GDP quarterly at 8:30 a.m. with durable goods, core durable goods, advanced GDP index, the goods trade balance, the unemployment claims. So lots of news at 8:30. Let's see. We also have news coming up at 10 a.m., which would be the new home sales, but it's only an orange order, so we're not really too concerned about it. We will see. And President Biden also speaks, but there is no clear time for that yet. So let's go back and hop over to TradingView. So what we can see very clearly here, if we compare Nasdaq with the SP 500, is that at 8:30 right here, that's the 8:30 news candle. Let me mark this up with a vertical line. That's the 8:30 news candle. And we had our 8:30 low or 6:30 low right here. Both of these lows have been taken out on Nasdaq and the S&P, so there is no clear divergence between them. So I wouldn't have taken that scalp based on a 5-minute time frame on this news candle. Took liquidity below this low. So we want to, that's why we basically got this continuation set up further to the upside. We can also plot YM here on our chart. Let's have a look. YM1 on our index future comparison chart and see if YM did something similar. We also had the same low here, but not taken out on YM. So right here, we would have had that bullish divergence we'd been looking for to take, making pretty much proving the point that those two wicks here to the downside are a liquidity grab. An entry after this liquidity grab would have been, I'd say, rather hard. We had this SMT divergence cutting through all three indices right here at 8:30. We're going to be drawing out that 8:30 low later on our S&P 500 chart, so we will see what we're going to get today. I'm only going to be taking paper trades, so none of this is financial advice, just to make this very clear at the beginning of the stream. All right, the time right now is 3:28, so we have 2 more minutes left before the 9:30 opening. That is our Nasdaq chart, but we switch over to the S&P 500. And let the DR IDR load. You see it, for example, today on the ODR, we have got a false confirmation to the downside, after which we basically broke out to the upside. So I'm not going to be looking too much at what we see today during the RDR based on the master's concept. It's still going to be interesting. I'm still going to keep it on my chart. But overall, this whole opening range concept is basically from ICT, just a little bit more advanced, or a little bit made better by the master himself, or maybe not by himself with all the data you get with the lens, but that's not going to be the topic for today because I don't have access anymore. Alright, so we see 930 just open up and we expect some volatility right here on this candle. Let's see how the market reacts to those 830 news we got here. Let's use our comparison chart and draw out our 830 low on all three indexes. Alright, and we can check for SMT divergence. Currently there's no divergence forming. We see that Nasdaq is already leading the race, and YM, the Dow Jones 30, has pulled back more significantly than the Nasdaq 100 and the SP500. So we will be watching this live. There's no rush really to look forward. We already took out this high on all three charts, so we will just be sitting here patiently until we might see a nice confirmation. So we see Nasdaq is clearly leading the race. This candle to the downside could have been a potential quick scalp entry, but that's not what we are looking forward to do. So our next key level would be right here at 40.75. That's our next key level. The 25 level, we have the 50 level right here. That's a 50 level, so that's 25 handles in between. We have the 425 level further down here. That's 425. Right there. We can also just use the institutional levels indicator that I shared on the Masters Discord and to my trading community a while ago. And all we have to do right here is go into the settings section, and we're gonna choose 4000 right here because that's the closest price numbers that we're currently looking at. And now we will get our institutional level grid automatically plotted on our chart at the 75, 50, 25 and double or triple zero levels. The significant ones basically. Alright, so overall we will see what we're gonna get, how this 5-minute candle is closing. I wouldn't be taking any trades right now, please not anymore. Let's go over to ICT's Twitter quickly. And if you guys have any questions in the meantime, feel free to ask the questions and I will do my best at answering them. I'm monitoring the YouTube live chat. So 830 candle wick rate on 438 sell side. Still too soon to trust anything. Note 441 on the 830 low wick CE. 832 1 minute high plus order block, send it flying towards 458.75 buy side liquidity. So let's look at the most recent tweet he tweeted. I have things to do today, so I guess he's done for today with his call outs right here. Let's scroll down a little bit. Screenshot 1 minute ES here, 458.75 buy side liquidity, sold from the breaker we outlined, 5 handles backed and tagged. Annotate with your chart with confidence, you witnessed that the experience was genuine. 458.75, so we're gonna be drawing this level up, 458.75. Right here, that's high is basically what he is referring to. We can draw this level on our chart. That's the buy side liquidity that ICT mentioned. But if you would have been trading only the DR today and you wouldn't have been taking entries based on the false signal, yeah, this wouldn't have been the day for it. But I mean, we also had red photo news coming up at 8:30, so would have been risky anyway to enter, especially after we took out that buy side liquidity. So we had the ADR our ODR right here, the London kill zone basically, from 3 until 4 a.m. right above the ADR. So we could be looking forward to see some more upside expansion. Would be actually very nice, but we will see how that is going to play out. I'd say first of all we get started with our daily time frame and see where what we're currently looking at. So on a daily time frame, so this high basically 458.75 was the high that we formed on Monday. So what I usually like to do is I like to draw up my levels. So we had our previous week's low. Okay, here's Friday. This is our previous week's low. Let's mark this up. We make this one in purple with a line. That's our previous week low. In the middle, right, make this purple as well. Previous week low, and we open up Monday and we went above our previous week high. That's a previous week high level. PWH right here. Previous week high, previous week low, based on the daily chart. And within that range, we had two beautiful fair value gaps on the daily time frame. The first one would have been right here. That's a daily fair value gap. And the second one right here. And we saw that we just got this wick. And buyers started to immediately buy price back up high. And we closed basically with a very small body daily candle. And now we're already continuing with this trend today on Thursday with the news basically. So we open up Monday, we went above our previous week's high, we pulled back inside of our range for a possible continuation setup. So overall, on a higher time frame perspective, we could be looking at the buy side liquidity here next. That would be when December 14th high. And next possible target would be the liquidity above this level. But those are just levels. We are very likely not going to reach them within a day. I'm just going to mark them up on my chart because that's my usual routine. Okay, so overall we can now go down to the, no, actually let me also write down our previous day low and previous day high. Previous day low, I'm going to make that one in gray, a line, also in gray. Let's go down to the 4-hour time frame and see what we're working with. So on a 4-hour time frame, we saw this drop that left behind the fair value gaps right here on the daily time frame. We pulled right back into it. That's our previous week low. Let me redraw all those levels right here. Previous week low, previous day low, and our previous day high. Let me go to the 1-hour time frame. That makes things a little bit clearer for me. So we're going to be starting by drawing up our New York local time midnight. Right here, switch over. You have to select New York local time right here. Let's go over to Tuesday, New York local time midnight. Right here, so that's Tuesday. That's our previous week, previous day high that we already took out. Previous week high, so that's Wednesday, Friday. Oh, sorry, I made a big mistake just here and then. I'm gonna do the whole analysis on the 15. So we have our daily levels. We saw this drop yesterday inside of this fair value gap and a immediate rejection of this fair value gap back to the upside, right above our previous week's high, which would be sitting right here. So we have our purple line. Our next overall target would be the high above the daily candle right here, drawn up at 40.90. We will see if we can reach this target today. But overall, if we look at our current week so far, gonna be drawing up those levels. So let's get rid of this fair value gap. So we had Wednesday, New York local time midnight would be right here. So that's Wednesday, and then Thursday, New York local time midnight is gonna be right here. So that's until New York local time midnight. Let's go over to Tuesday, New York local time midnight. That's just my typical charting work before I even start the session. Today I was a little bit late, but I haven't started my regular live streaming schedule as of right now. So I'm still in the works to get consistent trader with the trader calendar and the journal set up. So this is going to take a little bit longer than I expected. So yeah, afterwards, once all that is done, I'm going to be streaming regularly on YouTube using the SP500 and the IDR, ICT concepts and his Twitter calls. So, okay, Monday right here, Tuesday, Wednesday, and now we're on Thursday. So we saw basically our Monday high and low right here. And the purple line, remember, that's our previous week high that we went above on Monday, pulled back inside of our range. We closed the day above our previous week's high, pulled back again inside of our range, went back above it, pulled back all in basically into this daily fair value gap right here for the continuation move or the sharp reversal basically back into basically above our previous week's high. So let's draw up our current weekly level. So this is our Monday's high and Monday's low right here. Tuesday basically has been inside Monday's high and low. So we had an inside candle on the daily time frame right here. So we could note this as an inside day. Inside bar, IB on Tuesday. And so this was an inside bar. We had our current high of the week right here. That's the 456.75. So this would have been a buy side liquidity target to get into this trend if you've gotten in somewhere around the late London session. Our Monday's low also was taken out on Wednesday then, after we filled in this fair value, before we filled in this fair value gap, we broke through this low, and you can see how we respected this low prior to actually breaking through it. So we wicked all the way down below it, and then immediately buyers stepped into the market, pushed prices up higher again, but then we continued dropping, filled in, grabbed the liquidity right here below our Monday's low. So it's not just this fair value gap based on the daily time frame, it's also our previous day low right there. So this is our Monday's low. This has been taken out. We can also annotate that Monday's low. Right here. And this low right here, as of right now, is our previous day's low and our current low of the week. And with high probability, this is going to stay our low of the week. LWO, low of the week. So now, since it's the low of the week, I like to color those ones in yellow, because most of the times what we see is disregarding that Tuesday was an inside day based on our opening range on Monday right here, that the low that we formed now on Wednesday is going to, with high probability, going to stay our low for this current week. So our previous week's high is sitting right here. Previous day low sitting right there. Our Wednesday's high, we already broke through that right here. So this would be our previous day high. Let's make this a gray line. This is our previous day high. Our Wednesday's high, we broke above it starting before, basically at 1 a.m. New York local time. Consolidated above it a little bit, pulled back, retested our previous week's high, broke above to take out the buy side liquidity above our Monday's high. And then what happened then? We instantly reversed with the 8:30 news candle back below our previous day high with a massive rejection again to the upside. So now our whole weekly template basically makes sense again. We're starting by drawing out our previous week high, previous week's low, and our fair value gaps and stuff like that based on our daily time frame. Once all that is done, we get started with our new week. We draw up our Monday's high and low right here. This is Monday's high. Monday's high and Monday's low. That already has been taken out right here on Wednesday. We had an inside bar on Tuesday. We pulled back, open up here with our low right here of this daily wick. If you remember it, this hanging man candle on the daily time frame, pulled back up to eventually close above our previous day high, previous week's high. And now we're continuing with this range. So again, we got rejected above our Monday's high. So this is still an interesting level to watch. I think ICT also caught a level that's really close to it, 4056.75. Let's have a quick look. Pretty sure that I saw something like this. If not, yeah, here then hit 40.75, looking for a ramp up to clears, 40.58.75, 40.61.50. Back at the break right now, prefer to see nothing lower than 4.51. 4.51 would be right here. So we will see how that's going to play out. That's just our 15-minute weekly template. I hope that makes sense. So if you have any questions regarding the weekly template, just ask me about it. The main idea is that we, let's say, generalize our weekly analysis or our outlook for the week, what we're going to be looking at, because now we have very high probability that this low is actually going to stay the low of the week because usually it tends to form on Monday or Tuesday, but because Tuesday was an inside bar, we saw it on Wednesday. Alright, so let's break it down to a 5-minute time frame and analyze the day so far. Here are our key levels. So we saw we got a super bearish engulfing candle right here 10 minutes after the New York Open. So let's open up our DR/IDR indicator. So now on the 5-minute time frame we can see again how important that support level of our previous week's high was, and it's not just fair value gap, think on higher time frame. What's the green box again? Yeah, the green box, if we go over to our daily time frame, it's this fair value gap right here. This daily fair value gap within our range from our previous week's high right here, formed on Tuesday the 17th, and our previous week low formed on Thursday the 19th. So this is our previous week's range. And then we started off Friday, basically pulled back inside of this bearish fair value gap. So we saw then on Monday, new week opening up, closing above our previous week's high. We got an inside candle right here. Theoretically two, if we only regard the bodies, we had two inside candles right there. We pulled back inside of this bullish fair value gap, also below our Monday's low right here. If you see that, sell side liquidity. And now we are continuing moving prices up higher. So the overall next target would be 491 for swing traders to take out the buy side liquidity that's resting above here. And then we could be measuring 50% of this wick right here, this wick to the upside, as another potential target, then at 4117. So slowly but surely we make our way to the upside again on the SP500. But we will see, because we have FOMC news at the end of the month on the 31st of January. That's going to be a Tuesday. So mark this on your calendar if you have a calendar. They're coming. We are going to come out soon for the Consistent Trader shop. So I'm really looking forward to that, to finally get those ones out. So 15-minute time frame. Let's see what we're looking at on the higher time frame. Rejection wick right here, clearly to the upside. We close bearish. Let's break it down to the 5 again. We are starting to see our RDR range to form. Fair value gap. Okay, so price bounce at what ICT calls consequent. Well, ICT knows this stuff 100%, but well, I'd say it's pretty hard to follow his live calls on Twitter. They're not designed for you to have it, to basically copy his trades very easily. It's there to, he wants to, yeah, teach you a understanding of how price works, how price action works, what levels are going to be targeted next, without using any indicators other than basically a few lines on your chart. And that's also an important thing. Those lines right here that we have on the chart right now, they are not random. They are significant key levels, like our previous week high, our previous day's high, our previous day's low. All those levels, they play a significant role for higher time frame traders. You could be doing the same thing with 4-hour highs and lows, because that's where very likely most of the 4-hour time frame traders are going to place their stop losses. Because what you could do, so you could simply, so we got rejected right here. Let's see if we can break below our 830 low. Let's check it out on NASDAQ here. Okay, so now we can see again a clear divergence right here. YM, so the Dow Jones already broke below the 830 low. We marked this out at the beginning of the stream. And we see that NASDAQ currently is the slowest one to, it hasn't even now. Okay, we're dropping right now. So we're going to be watching this closely. If we should see an SMT divergence between the 830 low and what we're currently looking at, so we see that YM already took out the sell side liquidity below the lows formed on Thursday, or right here below those lows. That's not Thursday's low, but that's our current day low right here. During the London kill zone, we formed the low at 440. So we already grabbed that liquidity on YM. So we will see if we are going to get that divergence, because we're still pretty far away from taking out our Thursday's low right here. So that's Thursday opening up according to New York local time. So roughly around this level. That's Wednesday. So okay, for sure on Dow Jones we already took out that sell side liquidity. If we go over to NASDAQ, we would be looking at this level right here, and on the S&P we'd be looking at these levels. So if we find some significant SMT divergence and a nice potential entry to go back long on Dow Jones, I might consider taking that entry, of course only with a paper trading account. To get back to those important levels and why it's helpful to have your previous week high, low, month high, month low, daily low, daily, and basically just having lines on your chart that are not randomly based and not some support and resistance levels, because you could also do something like this. Let's say we'd be looking at, for example, the Euro US dollar chart. We are going to close our chart. I don't want to see what's going on right there. I'm going to be using horizontal lines, and all I'm going to do is I'm going to plot a few lines randomly on the chart, and you will see that eventually those lines will play a significant role for support and resistance. So now if we turn our chart back on, we see perfect, we got a beautiful rejection from this level, held support here, consolidated within those two, between those two ranges, and all those lines are drawn completely random. I did not know that this line is actually going to play a significant role at this time. So I just want to point out that whatever line you're going to see on the chart, at some point in time, it's going to have an impact. Not really have an impact. That's just a random level that I drew on the chart. But so now if you, for example, use this low right here as your next support or resistance level, if we go into the future, we might actually see this thing to be true, that it's just a random line. But if we use previous week highs and lows, they're all the same. No trader can basically mark up two different highs and lows for the previous week, or no different previous day high, previous day lows. They're all the same, no matter who's actually looking at the chart, because with support and resistance, very likely many traders are drawing those levels very subjectively. So they're not looking at it from a, I don't know, it's just easier to have those levels on your chart and to look at them. And if those levels are respected and you see, for example, a double bottom forming right on our previous week's high and stuff like that, that's interesting then. Because they're all the same. Doesn't matter who's looking at the chart. The previous week high, previous week low, our previous day's high and previous day's low, they're all going to be the same. All right, so we start to see that SMT divergence forming. We will see if that might actually present an entry. We go over to the 1 minute time frame on all charts. All right, so as of right now, there's no new divergence. We have our key levels that we're watching on our chart. We had this initial drop at 9:30, and if we go to the 5 minute time frame, we see that our DR range has already formed. And the DR concept is basically completely based on this boost concept. I think if you watch ICT's mentorship, core mentorship, month 10, video 6 or 7 or 8, one of these, you actually see ICT explain the DR IDR concept. So all it's based on, it's the hour of the highest volume. Basically, as soon as the market opens up, that's at 9:30 until 10:30. So within that first hour, he also mentioned that there's a really high probability that either one of those highs or lows, once that 10:30 range is closed, is going to stay the high or low for the day. Still don't really get what this is about. What do you could you explain that more, what this is about? Maybe I can help you. What ICT calls consequent encouragement, right? Yeah, I'm pretty sure. Okay, so we see that the SP 500 now is also broke below the 830 low, so that's something interesting to note. We will see if this SMT divergence holds up. Overall, you could have actually had some nice entries into this downtrend after the market structure shift right here on NASDAQ within this bearish fair value gap. Another one right here. Nice limit sells. Another one right here. Beautifully filled for our target down here for overall sell side liquidity. Similar on the Dow Jones, but not actually. We already broke our 830 low before we filled any fair value gaps. Here, if you would have been filled, also could have been a nice entry after the market structure shift right here for a potential reversal. Pretty much the same goes for the S&P 500. We formed our, let me use the drawing tool right here. So we slowly but surely walked our way up, formed higher highs and higher lows, higher highs, higher lows, higher high. Then we broke 2 lows, 3 lows actually, right here, to the downside, signaling a powerful market structure shift, pulling back inside a fair value gap that has been created right here with 2 wicks for the continuation move down lower. Our overall sell side liquidity would have been the 830 low, or our current low of the day right here. We pulled back again inside a fair value gap, starting from the low of the 948 candle to the high of the 950 candle right here, this gap in between. Upsala, now I made a mistake. For the continuation move to our first target right here. I hope this whole concept makes sense. I can be drawing it out. So we formed higher highs, higher lows. We had our shift in market structure. Those 3 lows have been taken out. We pulled back inside of a fair value gap. That's the classic 2022 mentorship model. If there are any questions about it, feel free to tell me. So that's the S&P 500. Again, look at it. We rejected from our previous week's high. If that level plays any significant role, that's going to be right here. So we will see. the Nasdaq did not take out the 830 low, so we actually have some SMT divergence between the S&P and Nasdaq and Dow Jones. So we could be looking at a possible reverse opportunity, maybe with a market structure shift fair value gap entry. We will see. Right now it's within the next 1 minute. So after those 15 seconds have passed by, we are going to get a new hourly candle opening up, and we can watch it live on the ES and Nasdaq right here and see how volatility picks up as soon as a new hour opens up. Because that's when new hourly traders, so traders that only trade based on the hourly time frame, enter into the market. They obviously enter when a new candle is opening up. That's why it tends to bring some volatility into the market. Alright, so let's go over to our 5-minute time frame right here and turn on the DR/IDR. So we're starting to see big wicks to the downside right here. Our DR low is currently lining up with our previous week's high. Remember, that's our purple line right here. Our previous week high. This was our current high of the week that we took out right here during the London kill zone or during our ODR range. We pulled back, had the GDP 830 high impact news, pulled back below our previous day's high right here. Immediate rejection back up, taking out some more and more buy side liquidity, and we got a sharp reversal back below this level. So we will see how our previous week high is actually going to maybe hold some support, and what price is going to be doing around those levels, because we still have the SMT divergence in place. with Nasdaq not breaking the structure. We broke the structure on our 830 low on the S&P and also on the Dow Jones. Let's quickly check if there's still nothing new from ICT. Would be interesting. 461 backed. Be careful now. I won't be on Twitter for the rest of the day. That's not a problem. So also we just had a new news event right here, new home sales. Only a orange folder, so it's not gonna have too much of an impact. We can go over to the S&P chart and we see that right here when the news came out, nothing really it makes a difference, nothing compared to the candle we saw here at 830. If we look at this candle right here compared to the 830 red folder high impact news candle, huge difference. Alright, so I'm gonna close the YM chart right here. I don't want to be looking at it. We've got the levels on there. I want to be focusing on potential divergences between Nasdaq and the SP500. So I'm going to be drawing up the 930 open right here. Our 930 high would then be considered as buy side liquidity if we're going to take it out again. Let's make this in green. And our 930 high right here, 930 open, high was right above it, so we basically went above it, we instantly reversed at 940 with the next 10-minute candle right here. So that's what our buy side liquidity target. We have that SMT divergence now in place, and we'd be waiting for our market structure shift right above this high for a potential reversal opportunity. Yes, it's valid. I know we just had a bearish reversal, but now with this SMT divergence, we could actually be assuming that they drop down the S&P 500, the ES, below the 830 low, take out sell side liquidity for a potential reversal, because we did not see this low being taken out on the S&P, on the Nasdaq. So we will see. Our range on the 5-minute is still forming. We're starting to see bigger wicks to the downside, which could be a Nice. Okay, so we broke structure with the wick. What I would be doing now, I'm also going to be drawing up those levels on the SP 500. Again, guys, if you have any questions, feel free to ask me while I'm doing this analysis. So this is our current market structure. Let me actually connect my paper trading account. Paper trading, let's reset that quickly. Perfect. And now we would actually be looking forward to take a trade on the SP 500, since the SP 500 took out the sell side liquidity below the 830 low if we get that market structure shift. We can also be looking what we see on YM, because YM is also already has taken out the sell side liquidity, also below our London session low. We didn't get below this low right here on the ES, but we will see how that's going to play out. If we get a market structure shift, I'd be considering to take a potential long based on a fair value gap or the optimum trade entry. All right, let's see what price is going to be doing around those levels. We have higher time frame fair value gaps waiting for us here, and 25 more minutes left before we get our DR range confirmed. All right, let's see. Looks like price keeps continuing to drop. Right now it's just patience until we get that first hour in, hour of the highest volume, right after the 9:30 opening. So we're gonna be waiting until we get our candle right here at 10:30 to wait for a possible DR confirmation. All right, let's reload this quickly. Be careful now, I won't be on Twitter. All right, to continuing further to the downside, we close bearish on this candle. So we will see. If we go to our daily time frame on the S&P, we could be looking at a potential, I mean, yeah, we took out the buy side liquidity above our Monday's high, this level right here, after we took out Monday's low. So I hope this helps you with the importance of our previous day high, previous day low, and tracking our current week's high and low. For example, right here, because starting with this new week on Monday and then trading on Tuesday, your current high and low of the week was sitting right here and then right there until Wednesday extended that range here to the downside for our new current low of the week right here. Then we reversed immediately out of this bullish fair value gap right here above our Monday's high. So we could have traded this whole range to the upside as a potential swing trader. Now on Thursday, we went above our Monday's high. And now we will see what we're going to get, if we are going to close above our Monday's high or if we're actually continuing to pull back down again. Even though I don't see the case that we are going to continue to go further down, we could be looking at 50% of our wick, which would be right here as the next support level, right around our 000 level at 4,000. So we could be drawing this level up on our chart. Key institutional level, just a few pips shy or ticks shy of our 50% of this most recent wick. Alright, so our previous day high has been taken out as well right here. Previous week high, Monday's high right there. Monday's low has been taken out already here. Previous week low, previous week high, Monday's high, Monday's low. So let's go back to our 15-minute and see what the higher time frame is looking like. Monday's high right here. We went above it. We closed above it only once with a bullish candle. Immediately formed some sort of a pin hammer to the downside with a big wick to the upside and a body that's basically almost closing completely to the downside with only a small rejection. We again tested our previous week's, our Monday's high right here with this wick, continued further to the downside. And now we will see if we can hold some support here, and we are actually going to end up closing this day as a bullish day. If we do, I'd be looking forward for 490 to be tagged. 490 would be the high from a little while ago, from the daily time frame. Just mark up the 4090 level for the rest of the session. So let's go over to NASDAQ and our index overview. So overall we saw none of the indexes has broken the current low of the session so far right here, 957. None of them have broken it, so we will see. Right now we're inside a range, and we will see what's happening coming out of this range. We had this massive drop, this reversal right here, and we did not have SMT divergence. In some sense we had. Right here on the SP500, we formed our high right on this candle. On the NASDAQ, we formed our high on this candle at 936. If we look at the 936 candle, we went back above it on the S&P to grab liquidity above those equal highs. And on NASDAQ at the same time at 936, we did not break above the 936 level again. We made a lower high, confirming this whole idea further to the downside on the S&P 500, because on the S&P that's where we took out the liquidity right at 940 for the move to the downside. This would have been a nice, if you would have missed some of these longs here, those long opportunities, a potential, let's say, could have entered on this candle right here, or based on the fair value gap right up of here for a 75 tick movement to the next sell side liquidity target. Let me draw this in quickly again. That's our fair value gap right here. All right, so we see that we are starting to hold some support here. Check it out on the 5-minute time frame to see what we're working with. Consolidation range. We still have 20 more minutes for RDR to close. This is still our internal market structure from our low, pullback, new low right here below the 830 low. And if we break above this high, we could be looking at a potential market structure shift. I'm gonna get rid of those bearish fair value gaps because my bias for the day is bullish based. And I anticipated that this move here to the downside might have just been a fake out move to basically get traders long into the market, quickly liquidate them by dropping price below the 830 low. And so now we see we broke market structure officially right here, this most recent swing low at the accumulation zone. Yeah, I saw your question, but could you explain it to me again, what you really don't get at the moment. Good to know. All right, so let's go bullish. See how this candle will close for a potential reversal back above buy side liquidity. Based on the SMT divergence we have between Nasdaq and SP500 right here. And we'd be looking forward to trade the S&P since the S&P took out the south side liquidity below the 830 low. So I am going to place a sell limit, a buy limit right here with my paper trading. Buy limit right here and another buy limit right here. Our overall stop loss is going to be below these lows for a potential move back to the upside. And therefore we could measure the range to get a rough estimate what we could be looking at. A 1 deviation, a 0.5 deviation, a 1.5. You see how this is matching up with our buy side liquidity target. This was not drawn randomly. That's our current high for the day. 1.5 perfectly lines up with that. I hope we get filled with our entries down below here. But this would be the concept I'd be looking forward to. So right here, and another contract right on this low of the candle. Short model on NQ right. I mean this one right here with the break of our market structure, pull back into fair value gap, continuation lower. Overall, I'd not be looking forward to short. I'd first wait for the RDR completely to close, but as of right now, I'd be looking forward to trade that market structure shift, because this market structure shift also has a confluence with from the SMT divergence, because Nasdaq did not take out the 830 low right here, but on the S&P we did take it out. Unfortunately, we did not get filled with our fair value gaps entry, but you see, once we broke market structure right here, this is our most recent swing high based on this little chop right here, then we're measuring this range from high to low where we consolidated in, projecting it to the upside. 1.5 is perfectly lining up with our buy side liquidity. But yeah, we had a short model on Nasdaq earlier. We will see if we can actually get a complete reversal to the upside, or if we maybe just going to fill the fair value gaps after we had the market structure shift to take out the liquidity below Asia's low and London lows, basically, because we haven't taken them out yet. But this would have been a very interesting scalp to play. Let's go over to Nasdaq. So looking at our DR range and at Nasdaq overall, we see the ADR, the ODR above the ADR. Basically had a nice little support bounce from our ADR high right here. Bounced off it, basically invalidated the ODR session, the London session. And we're starting to actually get this pullback. We again hold support on the ODR low for the continuation move up higher, pulled back, and so far we haven't broken market structure. We are still forming higher lows and higher highs, as long as this low is not taken out at 830, and that's the current play that I'm looking forward to take, because we took out that liquidity on the S&P 500 and also on the Dow Jones, but we did not take it on Nasdaq. And this would give me the idea that prices are likely to continue up higher. We would have already hit the 0.5 standard deviation of this small consolidation right in here. So we will see how that goes. Right now it's 4:19, so we have 11 more minutes left. Back inside this range now on NASDAQ. Pretty much the same goes for the SP 500. No new fair value gaps have been created on the SP 500. So let me close NASDAQ now. Because NASDAQ delivered the divergence, now we want to be comparing the 1 minute charts of those indexes that actually took out the sell side liquidity, which would be the YM and SP 500. Let's see if we are getting a nice little pullback back inside of our range right here for a possible continuation move to take out buy side liquidity above this high. Also note that on NASDAQ, our ODR midpoint is almost perfectly lining up with our current DR low. So we might actually see a range expansion day to the upside also if we base it on the daily time frame. I mean, also on NASDAQ, we filled this fair value gap. Once it's filled and we had this massive rejection wick, I'd at least expect a close above this level right here. On NASDAQ, we already took out the buy side liquidity above this high. We also had a few volume imbalances right around this level. The next target would be maybe 50% of this wick right here, which would be 12,150 on NASDAQ. All right, let's see. Maybe we're starting to get that pullback now. Now we're gonna need patience. And again, guys, if you have any questions, feel free to ask them in the chat. We're gonna need patience. Stream is lacking. Hang on. Looking forward to take. Test that. All right, yeah. Yeah, okay, now I've seen the proper question, MJ. Sorry about that. Yes, I can explain a little bit about why I have been banned from the Master's Discord. So I had my last live stream on his Discord server, I think roughly 1 week ago, and we were trading the RDR range there, and I was using the DR lens and drew out all the levels that we should be looking forward to take out. So we had our bullish confirmation. I drew up my maximum extension target and retracement target and stuff like that. But because I haven't been using the DR lens for a long time, so basically what happened is I mentioned that I wouldn't base my trades completely on data, on average data of the past 20 years. I would still like to see more confluence, like way more confluence than just this is our target, this is our max retracement. If we go to this level, the trade's going to work out, blah, 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 all based on data. And I just said that, no, I wouldn't base my trade completely on data, because I also saw a few days where the DR lens targets did not work out at all by using the DR lens. It's not a 100% win rate tool. That was my opinion about it. And then the master messaged me roughly 2 hours after my live stream that one of the members told him that I said that the DR lens is not working. and therefore I have been banned from the Discord server, not able to stream anymore. Yeah, and that's that. But it's not really that I need DR lens. We can trade price action anyway. Without the data, it's not really something you need. I mean, we will see. So far the pullback is working out pretty well. I mean, now it's 10:24. We have 6 more minutes for the DR to close to maybe get a bullish confirmation. We will see. Unfortunately, we didn't get filled inside of our fair value gaps on a 1 minute time frame. Neither did we do it on YM. I think we also wouldn't have been filled on Nasdaq. We could have been taking this fair value gap entry right here, but no, I wouldn't have liked that. Especially since Nasdaq is the stronger pair, because it did not take out the 830 low, neither did it take out the London session low. Alright, let's wait and see. We've created another fair value gap here on the 1 minute chart. Backed and tagged. Breaker block right here is up close candle. Theoretically, this could have been a potential breaker block entry. Right on this candle, breaker block. We closed above it, pulled back inside of it, and immediately continued further to the upside. Looks like I missed that breaker block. Focus too much on the fair value gaps here. We can also take a look at the DXY in the meantime. DXY. We saw that the DXY took out the current low of the month for January, right here. Low of the month, that's why it's great to have those levels on your chart. Got that reversal, that sharp rejection from it. Straight back up. No, the chart is not inverted. I was wondering. Yep, we took out this low. Right now we're still inside the range. We also filled this fair value gap, and currently the XY is looking like it wants to continue back inside of our monthly range. We can load the DR IDR here also on our chart to see if we see any confluence. So the ODR confirmed long. We got a pullback, beautiful continuation move further to the upside. We are basically still inside of our previous day RDR range. Overall, we're gonna wait for maybe a bullish confirmation right around 10:30. This could give us a slight indication of what's going to happen on the SP 500 and on Nasdaq. So let me bring up my SP 500 5-minute chart. Potentially, we could look at a rejection right based on this fair value gap right here and our opening of the DR range. I'm not going to be taking this one right now. Interesting. So now it's 10:25. 2 more minutes and our DR range is closed, and we will see what confirmation we're actually going to get. I'm still looking to take my paper trade buys here. That's not financial advice, that's just a paper trade based on a market structure shift and the overall divergence on S&P 500 compared to the Nasdaq 100. 1 more minute, or 30 seconds basically, before 9:30. And we have our DR range very likely already formed. That's not going to change much anymore. We're right now above the 50% level of our DR range. We had a slight market structure shift and immediate retracement back inside of our range. We will see. Maybe our buy limit entries are gonna get filled down here. So 10:30 is done, locked in. Now we will see what confirmation we are going to get. Bullish or bearish confirmation? What are you guys expecting? What is your outlook for the day? I'm not getting any live stream messages anymore. I quickly have to fix that. Is the stream still lacking? I think it shouldn't. No, stream's working with perfect quality. Just a little bit delayed. Perfect. So now we will see how our DR range is going to confirm. Be great if we get a bullish confirmation. But before we get that bullish confirmation, we pull back inside of our fair value gaps right here based on that market structure shift for a possible continuation move to the upside. I'm going to be streaming for 30 more minutes until 5 p.m. my time. If I don't get filled until then, it is what it is. I like to, if I'm trading the New York session, I like to trade the period between 9:30 and 10:30 based on with SMT divergences. Unfortunately, I did not get filled so far with the entries right here, but we just gotta be patient. That's the key. Right, let's look at DXY. DXY is looking like it's gonna confirm bullish, very likely. We also filled in a fair value gap here on the DXY. Alright, is there any bullish fair value gap here on the M5? Only very small ones, so I'm not going to be considering them. Let's hope we actually gonna get filled down there at 440 something, around that level, for a continuation move further to the upside. To take out the buy side liquidity above the 930 high. Yeah, ICT's gone for the day. Forex Factory, let's see how the news turned out. So natural gas new home sales. So they made new home sales. Then the forecasted the advanced GDP also turned out to be a little bit better than they forecasted it, but still less than the month before that or the quarter before that. All right, so let's go back to our trading view. All right, we might actually get our 5-minute confirmation on the DXY already for a long. 10 more seconds to go. Okay, so we got a bullish confirmation on the DXY. So if you're trading any US dollar correlated assets, like for example the euro dollar chart, we see that the euro dollar chart inverted to what the DXY is doing, confirmed bearish now after filling a volume imbalance here, fair value gap, breaking below the 830 low, below the previous New York session low right here that has been invalidated. If we go over to the British pound US dollar, we see something similar, not really that similar, but still we're close to get our bearish confirmation. Also US dollar, pretty much the same, even though I don't look at the DR, IDR indicator at all to trade Forex. I'm only looking at it to trade futures. All right, so we might now hopefully see a bullish continuation. I might actually take a market order from here with my stop loss just shy of this candle's low right here, of those three lows, 250, with our take profit target at buy side liquidity. We will see if that's going to play out. Of course, again, that's not financial advice at all. Very likely not going to play out right here. Hopefully we're gonna get that fill. We also have some SMT divergence between the S&P. YM may formed a higher high right here. Let's have a look at Nasdaq. Nasdaq also formed a lower high, so this could be potential SMT divergence for short-term structure. All right, let's wait and see if those lows are going to be taken out. Very likely. So since we already got that bearish confirmation on the DXY, we could be looking also on a reversal opportunity for the S&P. Okay, so we got stopped out right here. That just happened. Let's see if our buy limit orders hold up. If we get a fill inside of those bullish fair value gaps. Pull back. Let's draw our FIBs from our low to our high. We're now below the 50 level. And let's use our ICT range, ICT fib retracement. Our optimum trade entry is just sitting around that level. Let's go over to Nasdaq. Nasdaq is pretty much doing the same thing as the SP 500. Let's wait and see. So we got tagged now. My ideal stop loss would be below the low of that candle that created that last fair value gap right here. but I'm going to be placing it at least below the 830 low. Let's go over to the DXY, still continuing further to the upside. ES got a beautiful bearish rejection on a higher time frame, so we will see how that's going to play out. My long idea here, based on the SMT divergence, could be already invalidated because we had this move to the upside, but we did not get a nice little fair value gap entry into this trend. So yeah, we just gotta be patient and wait if this idea is going to play out, and if it's not playing out, that's just there. It's not the end of the world having a losing trade based on your idea. It's part of trading. Okay, so the SP 500, DXY is still continuing further to the upside. Our overall stop loss is gonna be placed 1-2 ticks below the low, and our take profit is gonna be placed right above here. We're starting to see some bullish reaction of those levels. That's nice to see. But a massive bearish 5-minute bearish candle right here on the 5-minute time frame. So we will see how that's going to turn out. If we can actually make it all the way back above this high for a potential reversal. Alright, let's wait and see. Alright, so now I'm anticipating a move back above buy side liquidity after we got filled inside of our fair value gaps. We hit the optimum trade entry. We had our internal market structure shift. We have the overall SMT divergence between Nasdaq and the SP 500. Let's just focus on the SP 500 for now to make it a little bit easier. We had that internal market structure shift right here. Broke above it, pulled back inside the fair value gaps we left behind right here, and now I'm anticipating a move back above buy side liquidity. Once we took out that sell side liquidity, bounce off the bounce off the previous week high. Of course, this is also a sell side liquidity target. It could be right, I could be wrong, but for me, I'm gonna be taking this long play. The DXY confirmed bullish on the 5-minute time frame, according to the DR/IDR concept. And so far on none of the indices on the 5-minute time frame we have a confirmation yet, I'm pretty sure. Let's go over to Nasdaq right here and stay on a 1-minute time frame. And now we're gonna look at YM as well, to see if any of those indexes are going to give us a confirmation prior to our prior to the S&P basically. So 1030, that's all done. We're starting to see more and more of a pullback. Gonna be dragging my okay, so based on the fair value gap concept, my stop loss is supposed to be at the low of the candle that created the fair value gap, which would be right here, this candle. So that's where I'm going to leave my stop loss, right here. Very likely to be tagged now. It is now 10:45, so a new 15-minute candle just opened up. And 15 more minutes until we get a new hourly candle. Which brings a new hourly momentum. Right guys, let's wait and see what's going to happen here. I've got my journal ready. Talking about the journal, that's what I'm currently working on. So if you're watching the YouTube live stream, you're gonna see the consistenttrader.shop, the banner basically for this video. And what it is, it's an online shop. It's not ready yet, it's not live yet, but it's gonna be very soon, and then it's gonna be based on the first come first serve principle. And basically what the Consistent Trader shop will offer is the first wall calendar for day traders, specifically designed for traders by traders, and a trading journal where you can actually write things down on paper. And plenty of studies prove that if you write whatever it basically is, for example, if you learn or if you study something for school or for work, writing it down on paper actually helps remembering so much more compared to writing it into an Excel sheet or something. For if you keep track of your performance and all your trades with an Excel spreadsheet, you're not gonna remember it as well as you can, for example, with a compared to writing it down on paper. An example, if I bring this up quickly, of the trader's journal. I've got the first copy now with me, so I can show that here quickly in the stream. This is our accumulation zone free Telegram chat. Right here, the trader's journal. That's what it looks like so far for the professional risk manager. And it's a little book where you can basically, currently I'm planning on putting 100 pages in there. And right here, there's a space for the date, then for the weekday. Then you're gonna write, for example, pound US dollar, 5-minute time frame long, and the timing of your trade. When did you enter? Reasons for your entry, your risk management. If we have news on the calendar, like a checklist before you enter that. It's not just a trade based on some emotions, basically, where you enter because, I don't know, because you have FOMO or stuff like that. So that's what this pre-entry checklist is for. And then afterwards, you're going to evaluate your trade. So first of all, the outcome of your trade, profit loss, the duration, your trade management, how you manage yourself, your emotions. If you, for example, took profits too early because you were worried it's going to go back to zero and maybe hit your stop loss. Rate your performance, write down some notes. And every 10 pages, you're going to find a consistency check where you count up your total trades, your total wins, basically calculating your win rate. Every 10 trades, you reflect a little bit and evaluate how well you have been performing. And that's actually going to help you so much with the consistency. I've been using a similar version, not with a ring book or anything, but just simple pieces of paper, recording my trades on paper, and that's where I got the idea from. I started to love it so much now I couldn't go back to writing them down in my Excel spreadsheet. It's pretty much like a little invoice book if you are in the trade business or something. So yeah, I'm really excited for the Trader's Journal. I think this is actually going to help beginner, intermediate and advanced traders by so much, because you tend to remember things better if you write it down on paper. It's that simple, and yeah, I'm really excited for it. So I'd say we switch back to TradingView and see how our trade is going. And yeah, again, if you want to know once the online shop is ready to launch, make sure to join us on Telegram and Discord. Those are going to be the ones who know the first. And if you go on our website, the Trader's Calendar or the Consistent Trader, you can simply put down your email address and then you get notified once our shop is open up. But yeah, that's it for now. And if you got any questions, just feel free to ask me on the Discord, Telegram, or here on the YouTube live stream. So we're still consolidating around this level. I don't really like this, but we're in our trade. We're running in profit, so I'm not really there to complain right now. We're inside a bearish fair value gap right here, so we might actually get some rejection. If we go back below this low again, my idea would be invalidated. It's a pretty tight stop loss, but we will see what's going to happen with that. Let me go back to the YouTube live stream to see. Yes, I am trading futures, but I'm also trading forex pairs during the London session. The community members who know me and who are part of the accumulation zone know what I'm doing every London kill zone. I'm using my own indicator with the stochastic RSI and the VWAP to basically scalp the London session for 3 hours per day. Pretty simple. And for New York, I like to trade futures without any indicators, just based on pure price action and what I have learned from watching ICT mentorships and courses. Alright, let's see. Rejected off a bearish fair value gap here as well on NASDAQ. The YM pulled back, is now holding support above the 830 low. We will see. We're still in our trade. What's the time now? It's 4:52, so 8 more minutes to go for our new hourly candle to open up. I don't like this break. We will see how our trade is going to play out here. So you can either go for a funded account if you are confident and you know what you're doing. Then it's pretty simple. For example, Take Profit Trader. Take Profit, like Take Profit Trader.com. I'm running a funded account with Take Profit Trader. They currently have a 40% discount sale. That's pretty nice. And you can get a funded futures account for less than 100 euro per month, basically. And then you can pass it on. Or if you're, for example, if you're against funded accounts, or you want to practice on your first private account, I could recommend AMP futures. Hang on, let me look that up quickly. I can show that. So Take Profit Trader would be the first one. This would be a nice here. Take Profit Trader. Currently have a 40% discount running for live, 40% off a pro release plus no fees. If you're into it, for a free pro account. So you can go for a 50k, 25k account and then take 40% off that, and you get below 100 US dollars or euros per month. And you're only going to be paying that while you're taking the challenge. And you have a profit target of, I think, 8%, drawdown target of 6%. It's pretty nice. I'm funded with them and I'm working with Take Profit Trader. Or if you want your own private account, I'm also from Germany. I'm with AMP Global. It's pretty simple to set up a futures account, even though you're not from America. So yeah, pretty simple. AMP Global. You could also go with, for example, TradeStation. That's also another good futures broker right here. TradeStation or AMP. Okay, so we got stopped out of our trade. We now took out the sell side liquidity below our current low of the day, and we very likely got we're about to get a 5-minute confirmation here on the SP 500, also on Nasdaq. YM is still lagging behind, so my initial idea was invalid. I'm going to be writing that down in my journal. I think we had that SMT divergence that basically generated that pullback back inside of this fair value gap right here, where we took out the 830 low on the S&P 500, but we did not take it out on Nasdaq. Unfortunately, I didn't get a nice entry into this move to the upside, but overall, I'd say with the DXY being confirmed bullish on the DR concept or DR indicator, now we got our 5-minute candle close, so we are going to be looking for short trades today. So yeah, idea did not play out. Let me quickly write that down into my journal. Alright, so now we've got a bearish confirmation. Now I'd be looking forward to target possible fair value gaps for a continuation trade further down, a DR mid rejection, a retirement setup, or a DR low rejection. But I'm not going to be streaming then. It's now almost 5 p.m. and I have to take my dog for a walk. I only wanted to do a quick live stream anyway today because I'm still super busy working on the Consistent Trader shop. Once I'm done with that, I will continue to make more live streams here on YouTube. And yeah, we will see how we develop from there. We're just gonna wait for this 5 p.m. candle, basically the 11 a.m. candle to play out. Got our confirmation early during the session, so we will see what we're gonna get. But overall, looking before I'm ending the stream, basically we can be looking at a higher time frame right here to see to search for our next strong liquidity basically. So we took out the current low of today, which would be right here. That was created at 4:30 a.m. If we compare all three indices, we see that Nasdaq has not taken out this low yet, so there's still potential for SMT divergence. YM is already leading, or YM already took out the low for the day right here at 9:30 at the opening. So our next target could be further inside this range that this move basically from yesterday. We took out Monday's high, so it could be looking at fair value gaps right around this area. Our previous day low is sitting right here. This would be a nice drop. I'm not sure if that's really realistic. For me, I'm done with this trading day. I made some profits during the London kill zone today using the strategy. The community members know what I'm talking about. And yeah, for the S&P 500 on Nasdaq, I'd be considering to take a bearish fair value gap entry for a continuation move further into the bearish direction. But we will see how this is going to play out. We could also see a false stay. I mean, yeah, it's a 80% probability now, roughly around 80% that this high is going to stay the high for the day or the high for the session, because 4068.50 is the highest point we have made so far on Thursday. So we'll see how that's going to play out. Of course, now knowing it with hindsight and knowing that the DXY confirmed bullish, my idea to take this pullback into our order block fair value gaps right here from our DR low for a possible continuation of the upside was invalidated. It was worth the risk to reward ratio, but now knowing what we know already with the hindsight, we can tell that this SMT divergence I pointed out at the beginning of the stream, that The ES took out the 830 low and Nasdaq did not take out the 830 low. This is SMT divergence, a divergence between the two indexes right here. So that's why I was anticipating a potential long. We've got that long. We've got a pullback of almost from the 830 low to a high of almost 90 ticks, 22 handles. Scalping a 10 handle move from it, yeah, definitely possible, but unfortunately we did not get an entry on the 1 minute time frame, so I missed the opportunity there, and I had the limit orders still in place for the whole idea basically to take out the buy side liquidity. Unfortunately, it didn't play out. We got our bearish confirmation. We also now on Nasdaq broke the low for the day right here from 4:30 p.m. So there's no divergence in the market anymore. We could be looking for a potential pullback into a fair value gap right here, or maybe the fair value gap that's haven't been created yet for a potential continuation move further to the downside on all major US indices. No worries, you guys are very welcome. Was a small little audience today, not as usually on the Masters Discord, but it is what it is. I'm not too worried about it. Still making my profits daily. I'm not a fan of all that data anyway. It's nice to have, but I don't know. I wouldn't like to get dependent on someone else's data. I'd prefer back testing, for example, the ODR, RDR myself. I've got a nice little example for that recently with a friend of mine. We tested last year's September on the, for the ODR and RDR range right here. Let me take that up. The results. So I already tested a whole month right here. I had a total of 43 trades with 14 total wins, 11 losses, 25.5 total risk to reward within that 1 month, and a total amount of break-even trades of 18, because once we reached a target of 1.1 R, I moved my stop loss to break even. I have links to every chart. And yeah, that's pretty nice to have a little amount of back testing. It's not enough, but we will see. So a 10R, 12.5R, 7R, and -4 risk to reward across all those 4 trading weeks here on the SP500. That's where we tested it. It's nice to give you that little extra bit of confidence that, yeah, doesn't hurt you when you're taking the trades. All right, so I think I'm going to end the stream here. I hope you guys learned something, and if you guys have any questions, just feel free to ask me in the Telegram group or on Discord, and I will do my best at answering them. All right, guys, take care, and yeah, trade safe today. We will see how this week is going to end up. Overall, if we look on the daily time frame, it does not look. Let me go back to the daily time frame to finish up. Other than Monday, on a daily time frame, it doesn't look really appealing. Of course, there are some low time frame trades to be taken during this period. We found our Monday's high, Monday's low. Now we took out both the high and the low from Monday, fill a daily fair value gap. But we are about to almost get our third inside candle. Of course, it's not if we only respect bodies of the candles. So yeah, we would prefer a continuation move to the upside today, but we will see what we get, since the DR now confirmed bearish as well. This could be a potential short from this fair value gap right here. If we go to the 5-minute time frame, right from our DR low, maybe an IDR rejection for a potential short. down to our negative 0.5 standard deviation. Of course, that's not financial advice. The range right here, so 0.5 standard deviation, or for a 4 standard deviation, or an overall target of our 000 level, which would be sitting right around here for a potential short. Alright guys, take care, and I will see you next time when I'm streaming live.